To the news at hand, and Unilever is said to have beat Nestle in the race to acquire GlaxoSmithKline consumers business in India. This includes the prize brand Horlicks. PR Sanjay of Bloomberg News is here with the details. Well, Sanjay, this news came out last evening. It was talk of town. Tell us what you're learning.
So the last round for Horlicks days was like Nestle, Unilever and Coca-Cola. And what we understood, what sources is telling us that on price-wise, Nestle may have given a good, bid, but at the last round, Unilever has outbid them with great structure, which we had to know what is the kind of a structure which they've offered, and much better than, far better than, superior than Nestle and Coke. So Coke is literally out of the race as of now, and now Unilever holds an edge with the right structure and right valuation, which is not a great valuation, but they're looking for a 4 billion valuation originally, and you would have already seen what had done, Complan, what they were looking for 1 billion, and they've settled for much lesser than that.
But the story, Sanjay, that you filed or Bloomberg News file also suggested that while it seems like a done deal, there could be a chance that deal might not go through as well. So it's not a done deal, a locked deal as yet. It's a very high probability, I would reckon.
Exactly, you said it. So GSK had done a strategic review. The parent company, even after putting Horlicks brands on the block, they had done a re-review of the sale. So they are not very happy with the valuation. That's why the last round, you could see multiple negotiations, and you could see Nestle again coming with revising bid. Finally, this is what latest we were coming to know that Unilever has put a better bid. But we'll get a clear picture. There's an annual investor event happening on 4th and 5th of December for Unilever, where we'll get much clarity. But before that, Unilever has to put in a stable, clear-cut, price and edge or better structure, because we understand, but we understand that only nutritional brands will go out of it. So how this will pan out, where the whole India portfolio will be bought out, or certain other brands will go to a parent company. So we have to see the right structure, and whoever is putting the right structure with better valuation, they'll be the winner.
Well, let me tell you, if indeed they put in a new deal, I'm sure PR Sanjay out here will be flashing it on the Bloomberg terminal, and we'll bring it to you on Bloomberg Quint as well. But, Sanjay, Agam, I think, has gone through a sum of brokerage notes, which have, Agam, I believe, painted a what-if scenario, that what if this goes through, what happens to all the related parties? What are you learning?
Sure. So I'm going to stick to Hindustan Unilever, because since we are talking about that, and Unilever specifically in this case. So Macquarie is of the opinion that it is going to complement Hindustan Unilever's food and refreshment segment. Now that contributes to as much as 20% to your overall revenues at this point in time. But should they go ahead and buy the consumer business of GSK, well, the contribution of revenues could rise to around 27 to 28%. The biggest brands out here that we're talking about is Boost and, of course, Horlicks. Horlicks is, in fact, also a promoter, enlisted promoter in GSK Consumer, holding around 40% in the company. And they're also, and do remember that also 90% of your revenues for GSK Consumer come from Horlicks and Boost together. And this, of course, could complement Hindustan Unilever's food and refreshment portfolio going forward. Of course, we have to remember that it's garnered as much as 4,300 crores in the previous financial year. So that is an addition that could come through for, if it's Unilever or Hindustan Unilever, either ways, it's a benefit for Unilever here.
You would second that, Sanjay?
Yeah, but there are some concerns also. We need to flag certain concerns in the sector as well. So if you see, the market share of these malted drinks are slowly, falling, because there are a lot of options. Earlier there was, you will always recollect, I'm a Complan boy, I'm a Horlicks boy, etc. But now, availability of milk and availability of a lot of other options and so-called organic, natural Ayurvedic drinks, the market is slowly falling. So one will have to, and if we carefully see, these MNCs did not invest properly or did not nourish or nurture these brands to the level it could have been reached. Otherwise they could have actually fended off all this organic, so-called organic drinks market. But one will have to wait and watch how Hindustan Unilever will integrate to get into the next level, where they invest. They will have to do a lot of work to get it into the original shape.
Wow.
Just a word on distribution here. GSK consumer brand has distributors which come to around 1.8 million. Hindustan Unilever is much larger at 7 million. So there are a lot of synergies with respect to distribution. And of course, as we know that Hindustan Unilever has a very efficient, old marketing, well-oiled marketing machine in place. GSK has not been taking its marketing so seriously, considering, as Sanjay has already mentioned, that to a certain extent they have been losing out market share here. So should these brands come together, of course it's going to be a win-win for both.
Yeah, but in a situation wherein the that category itself is kind of falling out of favor as well. So it's an interesting deal. Let's see if there is more in store, of course, if this deal goes through in the first place. But Sanjay, Agam, thank you so much, both of you, for joining in and putting perspective out there.